Hello, everybody.
Hey,
Welcome back to Crypto
hey.
Talks. My name is Phil. That's Rob, and he's finally back. Yay!
Yay.
Yeah, he left us, but he came back. He couldn't resist, I think.
Reluctantly.
Reluctantly. Well, that's not very nice.
No, as in reluctantly, I'm back, as in home.
Oh,
Not here.
right. Yeah,
Not here.
and Dave, sorry for being 5 seconds late. Cry me a river, huh?
Is he the new Plippy?
Yeah, he's the new Plippy for sure.
Late. I mean, where is Plippy? I mean,
Yeah,
he
where's
was
Plippy? Plippy.
Yeah.
Anyway, yeah, so we're back, and Friday Night Hangout is something I don't think Rob has ever done before, so this is new.
This is not. Well, we did that impromptu one on the ETF announcement. Was that Friday? I think it was. Maybe. Felt like one. Anyway, that was the closest to this that we've done. So
it was a day.
It was a day.
Yeah. And that was fun, and so we've had this Friday Night Hangout. It's been pretty nice actually, because we've been having a lot of conversations, a lot of people asking stuff. It's quite empty today for some reason. I'm not sure why, but that's cool. That's cool. We like it anyway.
We'll just chat. We have stuff to chat about.
Should we open up the 15-second chart on your screen just to have it there while we're just hanging out?
Let's put it on Bitcoin. So it's planner at the moment.
Oh wait, is that not gonna work if I do it like that?
That's just your big face.
I'll have to use that. I was hoping we'd do this view, but with both of our faces, but I guess that doesn't work.
So
that's the 15-second chart. We had some liquidations.
Let's just have a look at my lines, because let's see how valid they are. This is kind of what I've been scribbling over the last few weeks. So yeah, this trend line was what I bought down here, which were just before the stream. I was like, yeah, it's fine, it's gonna hold, it's gonna uptrend, and then so not a problem. I bought some more. As I mentioned plenty of times, I did never buy in one go. People through the Discord of, they'll see bits of my trade history and they'll be like, wow, you're really good at catching bottoms. It's like, yeah, I'm good at knife catching, but look here, nope, wrong. So but if you build being wrong into your strategy, then it's not so much of a problem. So yeah, right now I've got a few positions underwater, but I have logical retests, and I make sure that my position size is such that I can get out at break even, deleverage, calm down, or if things look like they're going to melt up, I'll set a stop loss and hopefully let it ride. It's been about time now for Bitcoin to pick some sort of direction. I mean, the overall direction is still up.
It's boring up.
It is boring up. And, I think just before I left, we were talking about, this is now a downtrend, a short-term downtrend. That short-term downtrend has now, turned into a neutral / uptrending move. And we were talking about the RSI before. The 4-hourly still has a bit of a way to come down, but as I mentioned, take a look how often the 4-hourly actually fires. It can spend June, July, August, 2 months without firing. Sometimes you get them every two or 3 weeks, but yeah, don't necessarily at this stage. After a period of consolidation, I'm not particularly looking for a 4-hour oversold, especially here, because as we are here right now, even if we came all the way down to this trend line, we probably wouldn't come down to 30. So
if we have 2 or 3 candles, then probably that are red, but small red, that would probably work.
But maybe, but either way, have it come down to 67.4. I mean, yes, it's 67.3, but this trend line's coming up every day, and so this is, that is it. I would be happy to hold into a bit of a hole here, because overall, I started layering in a little bit around, I've been layering in. I bought this around this bottom as it came around and started turning around. stuck on the table near the top, and I've not got a great re-entry here, but I'd rather be in at this point because it's now starting to look like an uptrend rather than a downtrend.
Rob,
So,
pull your mic in.
hello.
Thank you.
There we go. So yeah, it's boring, but you can make it fun. By
honestly,
yeah,
I mean, some of these things are down hard today. I'll just jump over to mine just now real quick. So here's my Bitcoin chart. It's basically the same thing. My green line is 69K right here, and then I got these trends. So, and that's it. That's really what I care about. So I did add here to my position right here, but that's Bitcoin, and we already know what that's gonna do. It's gonna go into the halving in a boring sideways move. Maybe we get a big fucking dump somewhere. I don't know. I don't think so.
big
But
fucking dump somewhere. Yep.
yeah.
Well,
So, but like looking at, let's see, Solana had a nice little dump here where we both bought some right here, just under this line, I think.
I just pressed added a little of the buy to Solana.
Yeah, I mean, injected.
So yeah, we are definitely sitting here live trading as well.
Yeah, so I just wanted to show everybody, like, we keep talking about how you shouldn't just go all in with FOMO and do all these, buy and just leave some cash on the sidelines, because sometimes you get these ones where it just goes kaboof and you get it, and then you get this type of turnaround, right? Same thing here, boom, and then turns around.
Yeah.
So like render, holy woo, that is a nice liquidation candle, and look at that wick already.
Exactly, right? And this is that tale of patience. This thing we keep saying. Do not be all in when everything is at the top, when it's rolling over, and when you get a clear invalidation, when you get this short-term downtrend, as we say a few weeks ago, this is a break of this uptrend. Let's see how it develops. But at that point, yeah, you should be taking profits, because even on those retests up, people sell retests.
Here's how simple it is.
Yeah.
This is the price where render is. It's previous all-time high. This green line right here. And down here is the weekly close of that candle. So that's the weekly all-time high close, right? And I mean, test, fail, and then it hit basically there. Somebody's front running this, and I would have too if I was looking to buy render, but I'm not, because I have plenty of that.
Did it stop bang on $7 if you just look at where the low was?
Essentially, it stopped at 7.14. It never stops on 7. Okay. It never stops on a flat number like that.
You see, maybe not on KuCoin. On Binance, you'd be surprised how often it hits to the dollar.
This is on KuCoin. Yeah, that's true. But so Python did the same thing. Look, it's well, not the same thing, but it did essentially the same retest here. It's not really that, but it's a fib level. It just bounced on that. It failed this test right here. Tried once, came back up, failed. Right? That's Python. Shadow is kind of just a wonky one. So I'm not really looking at this and doing TO on it because it's so small. But everything has dumped massively. Jupiter.
Well, you can see. You look at this coin and you look at Jupiter.
Hey, where's my TA? There it is.
There it goes. It's got room to move down. So it's these. People need to get into their heads and really be prepared. These things are volatile. 50% moves. We said it all along. 50% moves for altcoins, standard, perfectly normal. Nothing surprising about 50% drops. You need that. If you've got something that you want to go hundreds of percent up, then when it rolls over and people take profit, there's only so much that you can do.
Yeah, so we actually got a really great question in that I wanna bring up, but just give me 1 second here. I'm just looking through everything that we're currently looking at. I mean, look at this. This is chat.
Yeah,
chat.
Is that your cost basis?
That is, yes. Because when I bought it, it was here on this dip.
Yeah.
When this candle closed, but the spread, so that was the only way to buy it. The spread on that DEX was absolutely crazy. So I bought, and it just jumped all the way up here to like this candle was like a super quick one.
So
just got weird.
Can we just have a look? So I can see straight away that the drop on that is getting close now to 80%.
I would.
So can you just do a percentage?
Yeah. Yes. 77%.
So, and I will say straight away that is the absolute golden zone for pullbacks is 80%.
Yeah.
And go back to charts, have a look at small cap coins, and have a look how many times it does 80% top to bottom.
Unless they do these type of things.
Well, it depends on the coin, and that's it. If you look at Shadow, it's not particularly taken off yet.
That's a 64% drop though from.
Yeah, it's volatile, is it? Well,
yeah,
that was the launch.
From this
we're not counting,
but still,
don't count that one.
Nah,
but
I
even
don't.
so, if there's a lot of there's a probably 40% drop there, and this is something that hasn't really taken off yet. So, yeah, I'm looking at chat there and going, that's very tasty, and
yeah,
I think I'll be buying some probably quite presently, because golden zone. And these are it was we've mentioned so many times that the best buys are the ones that terrify you, the ones where the chart looks utterly horrific. Yep. But look how bloody volatile this space is. Look how many times you've looked at the chart, seen it's going up and going, yeah, it's time. Oh,
I mean,
then it comes back up. Is it time to go? Oh. And it's been doing this now for a month.
You buy when you're like, I need new pants.
Exactly.
That's when you buy, and that just happened here, and we bought this.
Yeah.
And it failed. It wicked under this line here on Solana, for example, which is the double bottom or triple bottom retest. Mm-hmm. And
whether or not it's PTSD or whether it's just sheer sociopathy, we don't shit our pants anymore. There's now just no.
I think we're just
cool.
You got to experience. I keep telling people these things, right? It's like you got to experience these moments of, several times, and you've got to make the mistake of buying somewhere, and then it goes, and you say, and then you learn, and then you learn, and then you learn. So it takes a while.
Taking a loss, you've got to accept being wrong, changing your mind.
You got to accept stacking, like. If you go through a bear market, a real one, like we had in 2022, it's like you start accumulating. Maybe your journey starts here, and from here we go from 70 all the way down to 30 again. And you got to accept the fact that every time there's a dip within that downtrend, you're adding to it because it's a good opportunity. You don't know when the bottom is going to come, but you're accumulating, right? If you can have that mindset as somebody who's investing into something like Bitcoin, it's like you're going to be okay. The sooner you can accept that fact that you might be down on your investment for like 2 years straight, and you should still be happy. Yeah. The more I'm down on my investment, I'm like, yay! When it comes to Bitcoin, really.
I will say I'll keep using him as the case study. My dad started buying April 2021, a month before we dropped 50%. Now, that's the thing. Yeah, at no point did I say go all in. Do not go all in at 60k. Like, no, now is not the time. But
that would
start buying. Right? Maybe if you showed your screen.
Oh, I've been doing this lately. I don't know why. Yeah, it's right here, right?
So, yeah, there, literally right there. And that's because obviously that wasn't the first time I told him to buy it. I told him to buy it all through 2020, 2019. Yep. But that was where he finally was like, okay, I believe you now. Of course, that's when everyone believes you right at the top. So I said to him, it's gone stupid. It may well drop, but I don't know where the top is. I'm not going to sit here and predict the future. So just buy every month.
Yep.
If we get a sizable drop, then you can start thinking about putting a chunk in. And he did put a chunk in on a sizable drop at 50,000.
Okay, good.
Yeah, but that wasn't good in the sense that it went down to 15,000. He kind of did that without my approval, and I wouldn't have suggested it. However, he carried on and carried on and carried on and carried on. And in like mid 2022, I asked him about what was his rough cost basis, and he worked it out. It was about $37,000, and the price was 20 something. And he's like, how are we feeling about it? And I was like, you're doing great. Just carry on. And he carried on and carried on. Got his cost basis, I think, below 30,000, and here he is.
Happy days.
And happy days. And he has done that as a boomer with boomer mentality, with no skill, no knowledge, no anything other than just doing as I bloody told him.
Yeah.
Which was buy every month. And
but you did tell him, not financial advice, Dad. So he doesn't sue you.
I mean, in a way, his money's my money in that sense. So
fair enough.
Yeah. I mean,
okay. So you want to?
I'm giving the patriarch a retirement fund. I'm going to do it right.
so you want to actually ask a really great question here, which honestly I'm a bit surprised. How this is a really, really great question. Actually,
you're a bit surprised he asked a great question.
Well, yes, because I know this person and he is new to the crypto space. And so I'm like, okay, this is an advanced question. So kudos to you, Yuan. So will government-backed digital currencies, CBDCs, compete with Bitcoin and other cryptocurrencies, or will they work together? Well, Rob and I have one view on the whole idea of CBDCs. And I'm not a huge fan, but I do understand that it has a lot of good to it too. I just don't like the underlying.
Let me just find Pandora's box. It's down there somewhere.
Oh crap! Okay, so while Rob talks about this subject for 2 hours, I'm gonna go have a shower.
Right, we're open. Off we go. Come on, let's go.
No, okay, so I'll just briefly give you my idea of my feelings around the whole CBDC thing, right? I'll give you the negative side of it, and then Rob, you can expand on the positive sides maybe, and all that.
I will give my neutral side to it.
Sure, but something that I don't like about CBDCs is that obviously it's programmable money, right? Which means if the government wanted to, they could tell you or force you not to be able to buy certain things at certain times. So they could do that, but they probably wouldn't. It's the most totalitarian idea ever, basically, in my head, which is bad. And we've seen what happened in Canada with the trucker strike thing, where they just froze people's bank accounts. So they can already do these things, but with programmable money, they take it another step higher, and I don't like the idea of that. It doesn't mean that I think they're gonna do all that, but I just don't like that they've added an extra layer of maybe to the whole money idea. That's what I don't like about it. But go ahead, Rob, and explain this thing, 'cause that's your thing.
I agree with basically everything you just said. Fundamentally, I do agree. And I also agree that giving governments more and more power, governments will take that power, and some governments will abuse it. Other governments won't. If you give absolute power, corrupts absolutely, as they say. So the more power you give, the more power they will take. Now, with CBDCs, there is definitely a game theory afoot in that money has pretty much worked the same way for about 50 years or so, pretty much since the invention of the credit card. Ever since credit became available to households, that was the last sort of step change of money before the emergence of crypto. And before then, the previous step change of money was, well, several thousand years ago, before we had the ability to dig and refine gold out of the ground, which is inherently very easy to dig when you can literally find it lying around in places. So it's a very easy thing to use and has been reliable for years as a store of value. Now, we live in a digital world, and our money system is not digital in any form whatsoever. It's it's a digital payment system, but it still involves essentially mechanical hand cranking. The idea of remittances we sit here in in developed nations, largely very developed nations, who have robust financial systems, strong banking, strong property laws, the ability to transfer money instantaneously using numbers on a screen. And we take that for granted every single day. Now, there are, we say, 2 billion unbanked people around the world, and there are a lot fewer than that in the world that don't have smartphones. Now, CBDCs essentially cut out the commercial bank and allow themselves to essentially offer kind of bank accounts directly with the central bank. So instead of holding your account with the bank, you just have an account that has your CBDC balance. And absolutely, yes, that would be controllable by you say an arm of the government. Technically it's a private equity firm if it's the Fed or if it's the Bank of England. They're a bank. The Bank of England, the Federal Reserve, the European Central Banks, they are banks. At the end of the day, they have a mandate, they have a job to do. And the thing with CBDCs and programmable money is they allow for monetary policy to be dictated far more easily where it's needed. And whether or not this is implemented is a very different thing. But for example, if you say, what we're going to do with your wages is we can take out the tax directly from your salary, because everybody's employment is programmed onto the blockchain where it's actually being paid as a CBDC. And so it can be encrypted, it can be anonymized. There's no reason why your public data has to be available on the blockchain. I absolutely wouldn't condone that. I don't think anyone in government would condone that either. We have GDPR laws. So this isn't something like, oh my God, all your data is going to be available to the world or available to the government. They already have your data. One of my biggest pet peeves about the fact that we're in 2024 and I still have to go and get things like manual stamps on my passport, that I go to the hospital and they don't have my medical history from my GP. There's no reason why things like medical history can't be stored alongside your bank account, alongside all of those things that identify you, which is basically alongside the government. And you have to acknowledge that if you are using fiat currency, you are using government's money, and the value of that currency is derived from the government, not from the government directly, but from the economy that the government runs. People say that the US dollar is backed by nothing. No, it isn't. It's backed by a continent. It's backed by the most industrious nation that the world has ever seen. It's backed by the largest military the world has ever seen. It's backed by a robust financial system, a strong government, a strong legal system. That's what backs the US dollar, is the US economy. So to say that's valueless and worthless, don't be fucking stupid. So, why does the Zimbabwean dollar fall? Well, that's a very, very different reason to why the US dollar is going to fall. The US dollar is going to fall through shitty monetary policy, through people taking that money and not operating it in a manner that makes people say, I want to use this currency. CBDCs actually offer a way to fairly or more fairly distribute money. So, for example, whether or not you think this is utter evil or whether you not think this is a good thing, universal basic income, it's likely going to be rolled out country after country after country over the coming decades. The primary reason is demographics. Countries are going to run out of people. They're not going to have enough people working to pay for the services required. There's going to be vast money printing as a result of that. If you don't like it, find more people. That's not a controversial statement. This is how governments are going to have to do it.
Well, now they need to force people to have intercourse more often.
Well, even so, that comes with a 20-year lag. Many countries have exactly 20 years. So,
hence immigration, for example.
So that's why any country moaning about immigration, or anybody who has this nationalist idea of, oh my God, the immigrants are ruining my country, really need to take a look at what happens to their country without immigration, because those are going to be the people that are running your country when you're retired, because you're not having any kids. That
Yeah.
simple. So you can forward plan a lot of this, and we know how the central banks are going to act. And quite simply, one of the biggest problems with the stimulus checks during COVID was getting the money out to the people that needed it. How do you manage to vet and means test 350 million people in several months in order to decide who deserves the stimulus checks, who doesn't, who needs it, who what? It's impossible. Now, if they say, and they will say, if you use your CBDC bank account for your expenditures, then they will be able to characterize you far better as a person, as it basically in your status in society. Okay, yes, social credit scoring, again, people will be like, oh my God, this is evil. But when, and this isn't an if, it's a when it comes to handing out stimulus, one of the biggest peeves of that is that the stimulus was handed out wrongly. This is the ideal way to hand out stimulus in various forms. So whether that's universal basic income, which could include a food budget, where there's a certain amount of money that can only be spent on food, and it lasts a month, and after that, that money disintegrates. That is an example of saying, okay, we don't want you spending it on cigarettes and partying and alcohol or whatever, or holidays. You're not spending it on TVs, you're going to spend it on food. So only a certain amount of classified, it basically becomes like food stamps, but far more efficiently handed out. And if you are looking for government efficiency, so this is the kind of the twisted logic that the freedom people who are going to be completely anti-CBDC on principle, but also want a smaller government. This is one of the biggest ways to make a smaller government, is to make all of those tax dollars that you spend far more effectively managed and handed out. The way to do that is by knowing data about the population and knowing what they need. CBDCs, knowing how a country spends its money, what proportion is spent on rent, and not only that, what proportion is spent by rent, split by sex, split by age, split by demographics, split by ethnicity, split by immigration status. They would be able to, using the money, to track everything, but people only look at the negatives of that. People, what you're looking at?
Oh, another
Don't derail my
liquidation.
point with a funny face. Come on.
Another liquidation. just keep going, man.
Yeah, no, so yeah, people want to concentrate on the negatives of CBDCs in that, oh yes, they're going to spy on us, yes, they're going to data collect. Have you ever heard of Google, people? This has been going on for decades. You were a little bit late to this party. And what I'm against is erroneous data, is irrelevant data, is data that doesn't need to be stored about me being stored. Actually, there is a shitload of government data that's very, very useful for them to know about me. Now, if they know about me particularly, and they can use this to persecute me, and they can use this to, do nefarious totalitarian things, is that the fault of the CBDC, or is that the fault of the government using the CBDC wrongly? Tools of government can be used unfairly all the time. Is the justice system bad, or is a corrupt justice system bad? Yeah? So the CBDC is not in itself inherently evil or wrong. It is actually a bloody good thing, because it is the first time we're getting a money update in decades.
Yes. Well,
And
so
just to add to within that, say, yes, I fully agree. The US dollar, the British pound, the euro, the yen, particularly the yuan. But don't forget, the Chinese have already tried this. They've already tried the social credit score. They didn't work, quite simply because all of the different regions, all of the companies, all of the data collection points in China, nobody trusts each other, and there's no centralized, as much as there's one centralized authority, there's no centralized power in a way. China's very split up. So it didn't work. And that's in China, who are very willing to accept totalitarianism relative to us. You try and implement that shit in the USA. Just try it. Like, honestly, like, what you... Stop it.
I sneezed. I'm sorry. What can I do?
I don't know. Just try that in the USA. We saw what happened in Canada, and they're the friendliest people in the planet, as you say. But also, as you say, yes, they can already do this. And what my complaint was, I'm not a particularly flag waving nationalist right winger. I agreed with the Canadian truckers on principle, not necessarily so much in action. But one thing I utterly, absolutely did not stand for was Canadians' actions against Bitcoiners, people making private donations, having their bank accounts frozen. That was an act of essentially financial terror. And that is all. They can already do this. So what are you actually afraid of? Because they can't do anything else. They can't do anything new. They can just do it more easily. And it's just as easy to change laws to do it more easily as it is to make a new digital currency, for example.
Right. So essentially, what we're saying, our response you want to your question is they're not the same thing.
Well, no, but okay. So we've that was basically a nice.
Yeah, we're explaining what
bit on
CBDCs are. So
okay, so now let's put in Bitcoin. So I don't know if you want to add anything to add before I just carry on monologuing.
Not really. I kind of let you do these things.
Fair. So what you then have to think is, okay, certain currencies, euro, dollar, pound, yuan, yen, they will put in punitive measures. They'll put in increasingly totalitarian measures to try and protect the value of their currency being stored in the way that it already has historically. These things are reserve currencies. They have a huge amount of sway. And other emerging market currencies, they don't have that leverage. They don't have that ability to say, yes, we're going to put in punitive actions to keep money in the country. Because if you want to attract investment and you want to attract money, then you need to have free flowing capital. So what we will see is we'll see various levels of totalitarianism and control and use of that control in different countries. And you might get El Salvador, for example, who decide that they're going to make a Bitcoin-backed CBDC that has incredibly strong, favorable laws from a crypto perspective. That might in itself... Ooh, that was dirty.
Yeah.
Ooh.
Let me just real quick. We're looking at everything.
Ooh, no. Yeah. Switch to mine. Switch to mine. Let's get some second chart going on.
Yeah.
Let's get on Bitcoin.
Yeah, I just reacted a little bit there
this
to
is fine. Yeah,
we're
there you
getting
go.
mega liquidations right now. So my buy order hit. That was nice.
That's nice.
I did hit my line, like I said. But yeah, currently just real quick. So Bitcoin is currently liquidating again. So we're down 5% today. Ethereum 8%. Solana 13%. We're at 150 on Solana right now. Massive liquidation there. I think my buy order hit on that one too. Yes, this is the flush, everybody.
Yes,
this is the flush that we keep talking about.
And it's quite interesting. We were talking about before. Before it's like, oh, is this the flush? It's like sometimes you look at the flush and it's like you think it's there and it's not, and it's like, no, this is when you know this is the flush.
Exactly. Let me just real quick turn over to my...
Wow, look at that wick.
Yeah, that's a market buy if I ever seen one.
Yeah, that is a...
That's on the second chart though, but yes.
But even so, that is on Binance Spot. And that buy order of 54 Bitcoin pushed the price from 66,800 to 67,800. $1,100 move, basically.
In one purchase, yeah.
In one move, in 50 Bitcoin. So that is an example of the order book emptying out. And now you get to see, okay, are more people selling? Because now all of this flush, all of these stop losses have all been hit. The order book gets cleared out, and now we need to see, where does it fill? Does it fill above or does it fill below? And this is where the market's testing. So you got all that volume in, and now we're getting the retest down. And you see this retest is on much lower volume. If we look at this volume here, it's minute compared to what it was before. So there you go. Now the flush is coming down, and you see the volume is still not there. Let's see it coming in.
Because yeah, we're gonna see some fun numbers.
65.8.
Oh no, my Solana position is going. Oh, I'm 20 cents away from liquidation. Oh, it's still there. Oh my goodness me. And there it is.
Boom.
That position got liquidated.
Oh dear.
Yeah, the Solana one. It's my first liquidated position in so far this year, or since like the third, but that one I kind of let liquidate.
So damn, that's yeah, that's how quickly things can move, guys.
Yes, and I was gonna show here just real quick. So here's Jupiter down 26% currently. Nasana 14%. That's not very big. Python network down, went all the way down to 55 cents. Render $6.50. Wowee. Ooh. That is a big red day. Injective, same thing. Injective is actually about to hit its trend line that it hasn't seen since October last year.
Wow. Yeah. So you look at that and you think, how many months have people been buying for, and now they get the buy opportunity.
Yeah.
So yeah, it's
dang. Yeah, that's we don't see these very often. I love that we're seeing it live. And sorry, we kind of jumped past your question there in the middle of this because
we will come back to you. We'll have to do a bit of clicking.
Back to the 1 second. But yes.
Okay, let's just get rid of the RSI because we don't need that right now.
Let's keep this one up and just observe it while we talk. We're talking about the CBDC thing.
Within that game theory, this idea that you're going to have punitive measures of CBDCs, you're going to have other countries that don't have the same pulling power as the US, as Europe, as all these advanced economies. And they're also going to get in on the CBDC train. And so they're going to do so using, ideally, basically attractive tokenomics. And if you are a failing nation, if you're a nation that is completely untrustworthy or something that's had real problems, for example, say Sri Lanka, Venezuela, Argentina, they're going to really struggle to set their monetary policy right. And so, but if that monetary policy is open source, if it's publicly available, if it's known, then that actually makes the stability and confidence in the currency potentially a lot easier to stomach, and it might actually spur on a lot of investment in countries that have previously struggled, particularly like Argentina, that have gone through periods of boom and bust for decades and can never seem to quite get the formula to get any sort of sustainable growth. And they always struggle with the currency booms, currency busts, and maybe a CBDC could actually really help them to stabilize. And so Bitcoin, in that sense, is another CBDC. It's just a decentralized one. It's one that it's the opt-out. It's the neutral CBDC. It would be the reserve currency for people who don't want to use a reserve currency. So what that will encourage is if you think of these CBDCs as having a natural inflation rate, which they will, then over time, you can think of this as being the global liquidity, which is currently very sort of obfuscated and hidden, and people don't know where the money's hidden or how many times the same bond is being used as collateral. And this whole system is just intertwined in debt and nonsense. And if you can put all that on chain and really simplify and make it transparent, then actually, if you have, say, a 3% inflation rate globally or a 5% inflation rate globally, then Bitcoin should, in theory, match that liquidity gain, and Bitcoin would basically just become a global representative store of value of whatever it is. And I would actually say that it would be the de facto currency for energy. That is what my prediction is long term, is that the overall global currency is not going to be Bitcoin, it's going to be kilowatt hours. But kilowatt hours are not necessarily an easy way to measure when they're valued all over the place and they're hidden. And so Bitcoin will act as a pseudo energy market, and you will buy Bitcoin and transfer Bitcoin and mine Bitcoin to take advantage of all the pockets of energy surplus that exist in the world. So to me, yes, they are very different, and they will interact in that all of this liquidity, this global liquidity going on chain, will hopefully open up regulated exchanges. We'll be able to have crypto transactions and on-chain transactions added to them much more easily using CBDCs as an interface. Maybe we'll see how that gets developed, but there's a lot of potential good, along with, as I completely agree with all of the nefarious things Phil says, but I will wait to see how something is released and how it is actually delivered before I will go judging it as positive or negative. If it is released and it has all of the bad things that people say it has, I will be fully on board with the negative camp. If, however, some countries take shitty action and other countries take good action, well, then I will praise some and criticize the other as their position deserves. So I hope that answers the question. If it doesn't, if there's any more follow-up, then please add away.
Right. I did see we got another one here, actually, from Muxise. What is happening to the market and what can we expect?
It's going down.
Yeah, it's going. So what's happening currently is we're seeing a bunch of liquidations, long liquidations, and especially on the altcoin market. So if we were to look, if you can bring up the Bitcoin dominance right now, Rob,
yeah,
we'll see that when things go slow, for example, we'll see how Bitcoin kind of holds itself together much better than everything else. Yes, you see that big green candle right there.
Breaking out.
So what are we at percentage wise?
55.8.
55, so 56%. Yeah, it's not alt season.
It is not alt season.
It's not alt season.
It is absolutely not alt season.
Yeah.
Yeah.
So this is what we were, if we look at if I'm just going to look real quick here, I'm just going to hide.
So if I could just, here. maybe if we can just flip.
Just real quick.
Okay.
We were talking about, once we get to all-time high, we're going to see sideways boring moves for a while. And that's exactly what's happening right now. We're liquidating. Bitcoin is liquidating within this range that we're in, right? So nothing has changed really, but it scares the market a lot, right? Mm-hmm. We're still sideways on Bitcoin, right? Meanwhile, Ethereum is kind of also sideways. Solana still sideways, but that's a nasty candle right there for Solana. Injective, same thing, but it's essentially we're sideways within some type of range that looks like this. Yes, that's a big range, but nevertheless,
that's the range.
Overall, we're expecting this, because as soon as Bitcoin does one of these candles within its own range, altcoins will just go completely.
Yeah. Well, I mean, if you want to just flip back to my chart, so
yes, I will. There we go.
So it's a lot slower, it's a lot more boring, but ultimately it's the same behavior. Is this last peak late 2020? Can anybody remember what that coincides with? Oh yeah, Bitcoin breaking, coming up to its all-time high, and Bitcoin dominance absolutely skyrocketed, and the altcoins were just flat or going down in some cases. Like, you were literally seeing altcoins losing value while Bitcoin was going vertical, and that's quite simply because the market will follow the leaders and the one that's moving. And when Bitcoin's moving and it's moving hard in either direction, the altcoin liquidity is just drained and it's sucked out. And we've seen Bitcoin consolidate in the market for a year and a half now. This is not, this is a continuous drain of altcoin liquidity. Like, this is not alt season. Yes, we've had specific movers like Solana, but as warned, as predicted, Solana can have a very, very nasty pullback against Bitcoin. Ethereum, during its incredible run in 2017, had an 80% pullback against Bitcoin mid-cycle, and then it turned around and pumped all the way up to an all-time high. So don't think that can't happen to altcoins. There will be flushes, and there can be significant times where Bitcoin just doesn't do what we want it to do. So yeah, right now, there's a saying: when Bitcoin goes up, altcoins go down. When Bitcoin goes down, altcoin goes down. When Bitcoin goes sideways, altcoins go up. And that is very, very accurate. The altcoins spend most of their time going down. It's not many alts that really, really continuously have bull runs. Even the ones that are continuously in an uptrend, it's choppy, it's nasty. I mean, just let's say ETH is the easiest example because it's been around the longest. Let's just put it on the log chart and put it out to the week. It was Bitfinex. I can go back earlier than that. Kraken. Yeah, going back to 2015. Let's just have a look at some of these drops. 67, 68, 60, 54, 47. Like, that's not including, you look at the actual bear market. ETH kind of skipped the bear market. It just had one massive step down. It didn't really do much other than that. But even then, within that, every single time it's running, apart from here and here, what's it doing? It's just chopping you out continuously all the time. Up, 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 down. A couple of months up, couple of weeks up, couple of months down. It's not really going anywhere most of the time. So when it goes up, expect it to come down. When you spend weeks and months sideways, then expect it to go up, but be wary of moves like this, because the market is going to find liquidity. Right now, an awful lot of very smart people, hopefully, just loaded up their bags. They're going to ride it up, and then they're going to see the strength in the market, and they're going to go, is there actually strength here, or are people starting to sell off again? If people start to sell off again, what will they do? They'll take those bags that they've just ridden up 10 or 20%, and they'll dump it again. So we're going to see these flushes, and this won't be the last one. Maybe this is the low. At the moment, we can't be sure. My feeling is still on this being just a nice liquidity flush, and everyone's going to turn around and go, yep, lower low. Well, depends where it closes.
It's a wick.
Exactly.
This is why we use the candles. The wick, most of the time, are just liquidations. I mean, if really great example, because we always keep talking about fib levels and all that. So I'm just going to use Solana here as an example. I mean, we broke out of this. This is when it crashed further down. Crashed through the double bottom. It tested it again. It failed, and it hit the fib level, and then some extra. Right, and that's cascading liquidations. It just keeps cascading. I got liquidated just there, $1 away from being safe, basically, and that happens.
I did on a small position that
mine was small. It was 3 Solana.
Well,
Mine's not really.
I was just looking at it, and I saw the liquidation, the margin alert, and I just didn't have time to add it. But
and I did get a small quick question outside of I just got a DM to me on Discord, and he asked, where is resistance or support on Solana? Well, right here. So we have the fib level, we have this trend line, we also have this $136.7, which is this weekly close on this top right here. And yeah, just this general area, like from here all the way down to this peak right here, which is also a fib level. So there's two different fib levels here, but the big ones is this gray one and the blue one. So yeah, we have a bunch of support. It's just it doesn't, when we get these kind of liquidations that are cascading, which means it goes so fast that people don't have time to set them up better and better on the way down. I had everything I could set up, and I should have just funded my account with more Solana to keep my position open, but I didn't, and that's my fault. See, mistake, right? So this is what happens. You get these big dumps, and most of the time after that happens, it turns around, especially during the weekends, because weekends we don't have the big money players in toying around with stuff. The weekends tend to be kind of chugging slowly upwards, so we'll have to wait and see what happens here. The retest, if you know, that wasn't the question that was asked to me, but the retest would be to get past where it failed. So 162 something, 162.6 is where it needs to retest and come above. Close above that would be amazing.
Oh yeah.
So, and everything essentially is on oversold. Not the daily though. On anything, I think. Maybe on some of them, but yeah. Ooh, not really.
Wow, just saw the funding rate on Cardano, minus 0.06. Ethereum is neutral.
Wait, minus what?
Minus 0.06% on the funding rate.
On Cardano?
Yeah, on Binance. Solana is minus 0.02. So here you go. We mentioned this about funding rates. Maybe this is a good time to mention that, because we talked about it. So how funding rates work. Funding rates are a feature of the crypto futures market in particular. I'm sure they're present in other, they are present in other futures mechanisms around the world, but basically they are a mechanism to hold the price of a futures contract in line with the spot market. And the way that it does so is by having what's called a funding rate. And typically that is a positive funding rate, meaning that if you hold an open long position, every 8 hours you will pay whatever the funding rate is at the end of that period, a certain percentage to anybody who's holding a short position, because of course anybody holding a long contract, there has to be an equivalent person holding a short on the other side. So when you open up this contract, then yeah, you continually pay this funding rate, and the nominal funding is 0.01% every 8 hours on most exchanges, and that equates to, if my memory serves, about 11.6% per year in interest rate. So that's basically the standard fee you're paying for the privilege of holding a long position. Now, when the futures price starts to deviate either above or below the spot price, this funding rate changes. So if the price is starting to deviate above, you'll start to get an increasingly positive funding rate. And that is a sign that people in the futures market are willing to pay a premium to purchase Bitcoin contracts or crypto contracts rather than purchase the underlying asset itself, the spot asset. And in doing so, what they do in effect is they show the market, I'm borrowing money here to buy this crypto, because nobody who's leverage trading, or most people who aren't leverage trading, don't actually have the money they're trading with.
Perfect question. While we're at it,
yeah,
I'll leave it there and you can carry on.
Yeah, sure. So yeah, basically this mechanism keeps the market in check, because if people are willing to pay a premium, then what happens is the funding rate will start to go up. And those people who are paying a premium, so they're paying above spot value to open up their paper contracts, and they're paying more every 8 hours to keep this open. And these interest rates, these funding rates can get really gnarly, as both me and Phil have found out during periods in the last month or so. And when these funding rates are getting high, it's a signal that essentially the retail apes are longing. And when the retail apes are longing, that opens up literally what we've just seen. This is the cascading liquidation. And the reason this happens is from margin calls. So essentially, when you are leverage trading, you have a certain amount of collateral, a certain value of crypto, whether that's a coin margin contract that uses crypto itself as the collateral, or whether it's a US dollar margined account which uses dollars. And so if you're taking out a leverage position and you're basically borrowing money to take out a position, if you've got $1,000 at 10 times leverage, you're taking out a $10,000 position, then that means any 1% move in your account results in a 10% gain or a 10% loss. And a margin call occurs when your collateral is getting dangerously low, i.e., so if you had this 10x position, if the price moved down, say 9%, you would have lost 90% of your money if you're 10 times leverage. So at that point, you would, or 80% say you get a margin call, which is basically saying this position is at close risk of running out of money. You need to add more money, otherwise we're going to close your position while it's still got some value left in it, essentially. And if the market continues to fall, then your position is force closed. So if you're holding contracts, you become a seller and you sell into that liquidity basically at zero value. You don't have any value left in that contract, but you add to the sell pressure, and so you become one of the sellers that is pushing the market down right at the very bottom. And that's what the buy side liquidity is waiting for. So there's a brilliant video, and it's such simple logic that me and Phil and Plippy came across a couple of weeks ago. And it's basically saying, just do this exercise of looking at the chart and then take your mind and go, this is where I'm going to put my stop loss. And once you've done that, then just, all on paper, just watch it and see how many times price comes down, just wicks down to where your stop loss would have been, and then immediately moves up. And people are always surprised by the fact that their stop just gets triggered, not realizing that much of the market, and particularly now as trading gets more sophisticated, more automated with more AI, it will look more and more for these stop punts because it's looking for you to sell. It wants to make you sell because they want to buy. If they see a swing low, they know that all of the stop losses are just below that swing low. And if they can wick the price down there, then they will generate liquidations. They will generate stops, and they will be able to push that price down. If they can push the price down a bit to people who are already significantly underwater with their position, that's when you get the cascading liquidation. And that's when the big whales grab all of that available crypto that has been previously locked away because we've had it sat in our wallets. We make it available for them to buy. And once they've bought it, then they do what they're doing now. They just melt it back up, because who's left to sell? Are you sitting here now trying to panic sell your Bitcoin after this? Well, some people will. And that's why you get retest dumps, because they'll want to roll it over, scare a few more people out thinking, oh, this is a dead cat bounce, it's going lower. And sometimes it does go lower, and it's scary.
As we just observed.
Yeah, exactly. And so you have to be able to watch and look at it and go, okay, that's the behavior I'm looking for. And that only comes with experience. Me and Phil have both seen this behavior so many times. We looked at the first liquidation and went, oh, was that it?
Yeah, we were literally saying before we started, we were sitting here looking at it and saying, I'll start my position building here.
Yes.
Just a tiny bit, right? And I'm talking about futures trading right here, just because that happens to be what we're doing most of the time when we're trading. But I opened a small one, on Bitcoin. It fell further. I added to it on this bounce. I actually added at 65.4, I think, right here after the wick. And so that position is pretty good now. And we're just waiting now, right? So I'm doing quick TA
Yeah.
here while Rob talks, just so you
Yeah.
can see what I do and just observe.
So, yeah, basically, the crypto market is a highly leveraged market, as you say there, and yeah, leverage gets punished. I've stepped into this well aware of what I'm doing, having watched it for years and years. Phil is a bit more of a noob, or well, not a noob, but
Thanks.
well, you're a noob in futures
I'm much
trading.
I'm much newer in the game than you are. Yes, for sure.
Much noober than me when it comes to leverage trading, but he is a somewhat obsessive soul when it comes to learning stuff. See, here you go. Like, if this goes up now, what will a lot of people be doing? Oh, they wait for this. They're going to wait for this test of this low. So let's look for a little wick below. Okay, so here it comes.
Because right now it's just, I'm just in the Bollinger Band just to kind of see when it starts turning on each time frame.
So let's see if it drops below. Okay, it came down to it. Come on.
Yeah.
Oh, do you want to look at my more?
Oh, you're looking at the 1 second, are you?
Let's second it. Let's second it. So yeah, so you can see, you can really see the resolution here, and you can see these market buys just clearing out the order book, and you're not seeing the accompanying wicks down. So yeah, most of the sell pressure is probably gone here, and this is a very typical market setup, and we'll just see it roll in, retest. I'm expecting a little drop down here. Maybe if it does drop, I know that obviously this is the 1 second chart, but what I like to do is, even on this sort of time frame, wait for it to invalidate one time frame and then you zoom out.
Yeah, but that's the same thing I do. Yeah,
exactly. So even though this is stupidly 1 second, okay, yep. So here comes a drop below.
The 1 second is just fun to watch live, because we're watching this together with everybody in this. We got 12 people watching right now, which I think is some kind of record, to be honest.
There you go. So there you go. So you got a wick below. Now so this is how we're going to grab the liquidity, and now it's either going to go down quickly or it's going to shoot upwards.
Yeah. So you've seen it happen several times here. Yeah. So up for now, at least.
So it's and so you see the same bits, as in nobody, and people will be like, oh, it's going to go up or it's going to go down, but it's like, yeah, when it breaks this bit, it's either going to go or within probably a few minutes. And there you go. What's it doing?
I'll say this though, fib level is just a tad below probably where you have your cursor right now, is where there's a fib level, short-term fib level. So it's testing that right now, and I'm seeing this green 1 minute candle on it right now. So that might be it. And it seems to be, maybe. And now it's testing the middle Bollinger Band on the 1 minute. And it's like, yes, watching the 1 minute and the 1 second is kind of ridiculous, really. I'll show you what I'm looking at right now, just real quick. So what I'm talking about here is short-term fib. It went down to test the fib. Now it's cracking through the Bollinger, and the next target is somewhere up here. We've used this fib already twice, basically, or several times as it's been touched, but that's the range right now, right here. And so that's what I'm looking at, and I don't zoom into the 1 second because I can't, because I'm cheap and I don't want to spend money on TradingView because I'm spending it on Bitcoin.
Let's see. I have 271 trading alerts used out of 400 available, so I need my high end.
And there we go.
But no, I mean, yeah, like
there you go. No, it's just it looks extremely volatile in the 1 second. It's just fun. We like to have it open when we're doing these because it's just funny.
It's just fun. But even so, it shows you can look at this kind of price action on, if I just like take a little mental picture of this, and then let's go back to say,
right, exactly.
you know, it's
It's the same thing, just long
yeah,
term.
exactly. It isn't any different. It's the same goddamn chart over and over and over again. And so yeah, I like the 1 second because it's literally showing me the patterns, and you see it there. People in Discord, when I've showed them how I'm picking trades, and you look at it and it's like bottom, 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 bottom. What did I do there? I literally just talked straight through why I expected that bottom, and it played out exactly as expected. Here's the bottom. You're going to come down. It's going to play. It's going to drop below it, drag the buyers in, drag the people who are going, oh no, it's dropped below the support level, it's going to go further, and then it pumps up. Where did everybody have their stop loss? Right here.
Yeah.
So, perfect example of not getting scared of downtrends and uptrends and going, oh no, it's just dropped below the previous swing, therefore it's now in a downtrend. Well, yes, but if it's in a downtrend and it's just broken a swing low, there's probably going to be a swing high as well. And yeah, sometimes it decides to absolutely shit 20%, like it's some things just have, but often no, it just sort of meanders down. And so there's, even if you get it wrong, there's a better sell opportunity than just absolutely cacking your pants at the bottom.
The phrasing is amazing, Rob. Yeah, hacking your. So okay, so we did. David asked, who starts the liquidations? Well,
we do.
Yeah, me and Rob.
We do.
We market, buy, and sell
yeah.
with $200 billion every time we
Yes.
can.
No.
True story. No bullshit.
Whales do. People
Whales
who have
do.
the facility, and those are people, and I fully expect that those will be market makers on most exchanges, or most big exchanges, that are able to really see the liquidity. They know where the money is, and they can look at it and they can go, we've been tracking all of the positioning, and we think there's an absolute dump load of liquidations at this price point. Looking at the spot market, it's going to take us 500 Bitcoin to dump it down to hit that price. So the futures market is going to follow the spot market. So we need to push the price down there, selling 500 Bitcoin. So we're going to open up 1,000 Bitcoins worth of shorts. We're then going to sell 500 spot Bitcoin. We're then going to trigger 5,000 or 10,000 Bitcoins worth of liquidations, or whatever stupid amount they can trigger, and then they get their contracts filled. Because bear in mind, when you're talking about liquidations, people are taking out humongous contracts. The futures market deals a lot more volume than the spot market. So yes, you can get, say, 1,000 Bitcoin order filled by selling 500 spot Bitcoin, and in doing so, you then just long using your futures contract, watch it ride all the way back up, convert that futures contract into spot Bitcoin, and then do it all over again. And you will do this until the market is exhausted, until all of the sellers, all of the irresponsible longers, all the people using excess leverage, all of those people have just been driven out of the market, and that's when it will go up.
And you can see it here on these liquidation maps.
So it's simple. So I wasn't lying when I said who starts it. Us, the retail, the irresponsible trader. And I use that, I don't mean us as in us, but as in us as in the composite retail people. We are the people who open up the positions, that open up basically having our asses handed to us on a routine basis by sophisticated investors with a lot more money than us. And the trick is not to fight the whales. The trick is to be a little minnow, be the successful minnow that swims in their wake, that just watches what the whale does and just follows behind, because we're a lot more nimble and a lot more mobile and a lot more liquid than they are. So we can actually outperform the whales, because we can open and close positions with our tiny little size that takes them a lot more effort to do. But you have to think like a whale and trade like a whale to do that. And sometimes that means looking at it and going, this market's turning against us, and even though I want more Bitcoin, the best way to do that right now is not necessarily to sell or to short or to do whatever, but to, even if it's not buy, to look at something, look at some of the, say, render. How many times, and I was guilty, I bought the dip on render, probably, I think about $9, and it hit, what, 7?
Mm-hmm.
I mean, I'm okay with that. It was
It's time preference.
It's gone from 14 to 9. I looked at that. I was pretty happy with it. I want some more. I absolutely think it's going to go ballistic over the coming years. I don't think this is something that's going to peak out anytime soon. So yeah, I don't care. I don't really care that it's now about 20% down.
Yeah.
I'm probably not going to buy any more because that's currently about the allocation I want for it. I'll just stick it in the hodl bag, put it away, see you in a year or whenever it looks like it'll peak.
And you can see on these maps here, right? Too bad we didn't look at this before this dump happened, but I can tell you right now that this red right here was definitely bigger than
yes,
$2 million currently in long positions. Yeah, meanwhile, there is, well, let's do here instead. So we got $4 million in open interest on the long side and $4 billion in the short side. Who do you think they're going to try to liquidate next?
Yes.
So it's like they clean this out, they buy their positions, then they crap through this stuff right here.
Yeah. So you could look now, where's the liquidation? Are the liquidations down or are the liquidations up? They're up. All up. A big chunk of potential liquidations there. And so now as the price starts moving up, these shorts have a decision to make, because now these shorts are open. You've got to think that the price can only go 100% down. But if you're short, the price can go infinity % against you. You know, that's the thing to consider with shorting, is that a long can only lose 100%. With a short, you can lose unlimited. So yeah, the shorts are now open, and so if the price starts to move up, all of these shorts now have to decide: do they close their position, do they get stopped out, or do they double down? And quite often, people in profit, they will double down on their position because they're confident of what they're looking at. They're going, oh, this is absolutely a bearish trend now. The price is definitely going down further. So when we bounce, I'm going to add to my short. But that's only true if there's enough available spot Bitcoin to buy. And so these leverage traders now that will be playing the short side, and I mentioned a few days ago that we started to see this negative funding rate. That's an early sign. It's generally not a buy it now sign, because the market needs some time to get bearish. And so what we want to see is we've seen it now, a big liquidation, very strong negative funding on a few things. It's still neutral or high. Oh, is it? Where's that? Oh, that was a bit. Yeah.
I don't like this. It's an ugly chart. I don't like these type of
color slider. Do the color. Change the color slider bar, and it becomes a bit nicer, one way or the other.
Oh, yeah. Okay.
Yeah, but it's still clearer.
Yeah.
Make it a year. Also, it's
more than 90 day.
6 month a year. Yeah.
Ooh, it's being slow. There we go.
There you go. So yeah, so you can see, but that does show very well the periods of euphoria, and that euphoria is gone now. That's melted in April. So we'll see how long it lasts. But no, these are the bearish signs we want to see. The signs that everyone's bearish. That's what makes us bullish. That's what makes us want to start getting involved in some of these things now. So yeah, we've had a liquidation. Me and you have both bought in. I am expecting a retest, but for now, I think, this could melt up for a few hours. So yeah, I'm sitting and waiting. I don't expect a lower low right from here, because who's left to sell?
Yeah.
And yeah, I can't guarantee anything. And it may be that over the next few hours, this comes up and then it comes back down and it starts to look rough. And that's when we might say, shit, this is going to go down another leg. Absolutely, that can happen, but it's not so often or not so regular that it happens very quickly. It's normal that we have a few days now of consolidating, of just relaxing and taking stock. Typically, we don't see. When was the last time we had 2 of these giant red candles after one?
Well, it's over here, I guess.
There. Yeah.
We had a big liquidation, and then we had a continuation. Then it bounced, but it
Yeah.
overall went. That's
But
a bigger
even then,
downtrend.
that wick was monstrous.
Yeah.
The first time around, and yeah, but say overall, the odds are in favor for a fairly hefty bounce. Probably a retest of 69. Probably a drop back down below 68. And yeah, let's just see where we go. Let's just relax. I think this trend has held for now, and this is one of those liquidations where there is a fairly non-zero chance, in my opinion, that we hit all-time high within a week or so after this, just because this is now the flush, and everyone that sold has sold. Everybody that wants to buy is now going, oh, it's going to go down. I'll buy when I'm going to buy at 60k, and it never goes there.
Yeah, no, and I mean, if you really look at it, just look at this trend line, right? It's like if we close today above here,
it's not a bearish trend.
No, this is
nothing bearish about this.
No, not at all. Like, and it's like we say, we keep saying it's sideways.
Yeah, exactly. From here, if it begins to now, if it breaks this trend line, if it comes down, plays with the Bollinger, comes back up and retests, I'd be very surprised if it just shits itself through here now. It can happen. It could come all the way right back down here to 62. But I'm not expecting
one of those double bottoms.
I'm not expecting it right now. But again, I'm not all in here, and at the same time, we've now got a very obvious place to put a stop loss, because chances are it's not going there. Now, where I would put it would be this candle that you're at, so that previous swing low is so left there. So wherever that bottom is, I would put my stop. So there, I would probably put it just below 64.5. Yeah. Give yourself $50 to wick in case it does come down. Yeah, chances are if it does break that, it's going to wick everybody out and then go straight back up, because that's what the market does.
Yeah.
So yeah, I really don't like trading with stop losses. Like I'm in the Caroline Ellis fan club. We actually don't use stop losses.
It depends on what it is. Like if it's a leveraged position, for me, I tend to just want to build that position up and make it a bigger position. As long as I can protect that and defend it and keep building it, I'm pretty happy doing that. Normally I wouldn't really like to do it here in this type of thing where everything is maxed out. But if you look at the daily RSI, like it's not even close to be, like we're below 50, right? And it's like here I'm okay starting to build, but I'm not going to start it up here on this peak when the RSI is peaking at 90. That's too much risk for me personally. But yeah, stop loss depends on what it is, really.
Yeah,
at the end of the day.
Does. So yeah. So for now, I'm just expecting a continuation, slow melt upwards, and let's see what happens. There was a question we got in Discord from Dave earlier.
Oh, did we?
So yeah, we did. It's quite a big one. I didn't realize how long we've been going for, but
this is the hangout where everyone is hanging out. We can do this forever.
Oh, well, we could. I can't. I need some sleep. I've slept about 14 hours since Sunday, and that's not an exaggeration.
Yeah, I know. What was the question that Dave asked?
It was, I have a question. So James from Invest Answers mentioned that China is looking for a new alpha since the real estate market was not what they expected. You mentioned some of this in one of the videos. What will this do to the global economy and crypto market? Can this be a trigger to start the global recession? Yeah, that is at least an hour-long video on its own. I will say a lot of...
You can plan on doing it on Tuesday.
Oh, yeah, that's good. But if you want an immediate source for what is some very good and very scary information, I would recommend checking out Peter Zeihan and a lot of his analysis, because he has a very sort of clear picture in his mind that China is going to disintegrate within the next 10 years as an entity, as the entity that it is. And it's kind of inevitable. I tend to share that view in that sense that there are certain demographic, economic, social forces that very few societies can survive for long, and China is at one of those stages. And so the real estate market not being what they expected, this is a demon that they created themselves. So fun fact is only about 2% of Chinese citizens actually pay tax. It's very difficult to actually rake in tax revenue in China, and so one of the primary ways that they did enable that was a land tax. So they made property, taxable, and so every time, and I'm not sure exactly how it works, but basically when you're transferring land, when you're buying property, when you're doing all this, that's one of the primary ways that the government take in revenue. So obviously they, as governments do, that tends to incentivize higher and higher prices for that real estate. So you then have like continuations, like the areas, either different regions of China would be basically handed out government subsidies relative to how much tax they were paying or how much value their land was. So of course, that incentivizes them further. Yep, just pump those numbers. Those are rookie numbers. You've just got to keep pumping them up. Then you couple that with the Chinese economy and Chinese society as a whole. Chinese aren't dumb. They've had one of the fastest industrializations, one of the fastest urbanizations, one of the fastest lifting of people out of poverty in history. And whether you like them or not, the Chinese Communist Party should be applauded for that feat of raising people out of poverty. It has, of course, come at an extreme social cost, and a lot of that is an extreme debt cost. So people were laughing for decades at China's trains to nowhere, their ghost cities, these areas of land where they were just building entire cities and nobody lived in them. They weren't dumb. People think people are stupid. They weren't dumb at the time. 20 years ago, they knew they were industrializing, people were going to move into these cities, and they needed to be ready. And hundreds of millions of people moved into these cities, and they're now absolutely filled. But they carried on. And so I've mentioned this before, but the Chinese real estate market, the property developers, they are a functional Ponzi scheme. They are currently, I think, of the top 50 developers, over 40 of them are in severe financial hardship, and they're currently in default on some of their debts. The Evergrande crisis that was about coming up to 2 years ago, about a year and a half, 2 years ago now, that was a warning shot. That was a warning sign. They were just the first to go. Similar to sort of the 2008 crisis, the warning signs, the first company goes. But China kind of plugged the gap. They held things together, and they've managed to go through. But whereas our conversation is all about inflation, China have the opposite problem. China have a real deflationary issue, and that is price of things going down. And price of things going down, for anybody who really, really dislikes inflation, trust me, deflation is worse by every standard than inflation, because it means that debt is getting more and more expensive to service. So prices going down in a debt-based economy, bad. Now, China is one of the most indebted economies when it comes to the real estate market. Something along the lines of 85% of public savings are in the real estate market. So they know that they can't trust the currency because the currency is manipulated. They can't trust the stocks because the stock market is just Chinese companies that are manipulated. There are capital controls that limit how they can get the money out of the country. They can't readily necessarily go and buy things like Bitcoin. There are something like, I don't know how true it still is today, but I know years ago there was a thing that the Hong Kong precious gem market and jewelry market was absolutely fire. It was at like incredible premiums in Hong Kong because it was the one place that Chinese people could go, take their Chinese money and go and really just hide it and buy a load of assets, or actual real world assets, in this case jewelry, which even though they paid a premium for it, it was out of the Chinese it was out of Chinese control. It could not be censored and stopped and manipulated by them. Real estate is another thing. Everybody needs a house. And in a world of massive industrialization and urbanization where hundreds of millions of people are moving into houses, well, that makes for a pretty hot and pretty popular housing market. And so that is where Chinese put most of their savings. And because of this very reliable, continuous demand over years and years, what happens to big companies that have monopolies and are able to just print money using their, by building houses in this case, they get greedy and they get behind on their payments. And especially when you're taking out dollar-denominated debt and then you're trying to build houses which you're then selling in Chinese RMB, well, what happens when the currency starts falling? Even if you're selling houses at an increased rate, you might not necessarily be covering your dollar debt obligations. And this has happened over years, worse and worse and worse, to pretty much all these Chinese developers, whereby now they are taking mortgage payments, because in China, when you put a down payment on a house, that house hasn't been built. It's just an empty plot. It might be an empty skyscraper. It might be so you and several, 100 other people put to that you all buy the plot. You all start paying the mortgage, and then the apartment block gets built, and in 5 years, 6 years, you have your house. Now, Chinese housing developers are using that money. So people who are now putting down payments and starting to pay mortgages on a house, they are using that money to build the previous houses. It's a Ponzi scheme. They don't have the money. There's something like $450 billion short of being able to get hold of this money. That's just the debt that they're in. That's the small problem. That's the really, really small problem. The big problem comes back down again to demographics. China has pretty much the worst demographics on the planet. You've got something like, for every woman, there's around 0.5 children being born. So for an idea, replacement rate is something, is above 2. I think it's 2.1 is replacement rate. And so China's population is essentially going to quarter in a couple of generations' time. And in that sense, they are running out of young people at an incredibly accelerating rate. And so on top of that, you had the issue of corruption and the issue of, with Chinese statistics, that things tend to get out of hand. And one big issue that people don't seem to take into account when they make up statistics is the act of compounding. That if you add 1% per year to a statistic, then after 10 years, you've added more than 10%. And that more than 10% of fake numbers then goes further and further away and starts adding more and more and more and more fake GDP. And we've now had years and years of Chinese fake data. Everybody knows that Chinese data is fake, and that included how many kids there were. Because, again, how did the Chinese regions get money? It is based on population. So they would overcount and oversubscribe and overreport how many children they had. And I think there was essentially some people now starting to look at this, some actual Chinese authorities, I think it was universities that have a shred of integrity left in them, and they've looked at this and gone, we have a major problem, because they think now they've overcounted their population by something close to 100 million people, and all of those 100 million people are under the age of 40. They have one of the fastest aging populations already, and they have one of the oldest populations already. And you've just taken 100, or you never had 100 million people in the workforce. So you don't have any people, you don't have any workers, you've got an aging population, and you've got a heavily indebted real estate market. That's the medium problem. We haven't got to the big problem yet. The big problem is most of the house sales in China are second, third, and fourth homes because, real estate is the only way that the Chinese keep any value. And it is now looking potentially likely, nobody knows the real numbers, and say this is a Peter Zeihan number, so I am relying on his data being somewhat accurate, and he even admits it's foggy, that for a country of 1.1 or so billion people, they may have something like 1 billion too many houses. That's how fragmented the data is that so if you're a normal country, you keep track of how many houses are being built. But if you're fragmented and all that data doesn't get to the centralized authority, who are the only people making any decisions, each region for years and years and years builds more houses or doesn't keep track of how many they've got, and eventually you do the count and you go, holy shit, we've got more houses than we have people, and our population is going to halve in the next several years, and 85% of our our population savings are in real estate. And the mortgage market is collapsing because house prices are going down because interest rates are high. And our cost of living is going up at the fastest rate in the world, and we're no longer able to afford being the industrial capital of the world. There might be a problem.
Yeah, I think so. I mean, and so with all that, once, I don't know if it's going to be like an instant type crash thing with that.
It may be that we don't know the part that the Chinese Communist Party has collapsed until it's collapsed, until the boats until the boats stop arriving, until there's the fuel has run out, until people are starving. It literally may be that we don't know about anything until there's some sort of situation similar to that in Gaza, whereby you've got a Hunger Games situation going on, and literally a region has rebelled, and the centralized government has started a civil war and a crackdown on its own people. That is entirely likely. And in that case, it may be that the region, the entire country, just collapses into civil war, warlording, and we end up with a situation very similar to what's going on in Central Africa right now. That's not out of the question. And will that trigger a recession? It'll trigger a goddamn depression. It will trigger global wars. It will upend everything we know about everything. The plus side of this is there will be winners and losers, and like it or not, it would be incredibly difficult to replace China as the workshop of the world. It will take a decade. It will take 15 years. Good luck getting hold of new iPhones. Good luck getting hold of cars. We will go back. We will take a huge technological step backwards in terms of cars, as a perfect example, because we won't be able to get the chips. You won't be able to get the parts to put them in. So people are going to go back to building really basic cars that have got bare bones, and they're going to sell them dirt cheap. Oh, guess what? Suddenly we've just now re-innovated cars from 30 years ago, but now they're safe and cheap and available. And now suddenly recessions breed innovation in a way that is absolutely necessary. The society's been on autopilot for 15 years since the last depression, or since the last recession. And we never really got out of it. We've had this period of free, cheap, easy money, and that's over. And now is the competitive time, and now is the time where companies are really going to find out how solid their business model is. And China might be the catalyst, Russia might be the catalyst, Europe could be the catalyst. Hell, Texas and Florida might secede from the US, and it's the US that's the catalyst. Imagine that being the catalyst for a global recession. It's not, all of these things aren't out of the question. And it's kind of like predicting how World War I started. And there's potentially 5 or 6 other trigger points that could have started World War I. It was inevitable because of the geopolitical map that had been built up. The same's happening now. We made China the workshop of the world, and China is disintegrating, and people are starting to realize it, but we're not going to realize it fast enough. And once we do realize it, the adjustment period is so extreme, it's so expensive, it's so inflationary. The end result for the US is basically it ends up rediscovering its manufacturing roots. It ends up solidifying ties with say Mexico. Mexico does incredibly well out of the collapse of China because US would just go straight down south, and they're going to pump tens, hundreds of billions into Mexico to replace China as its workshop. And China's not a very cheap workshop anymore. So the idea that China is irreplaceable long term is nonsense, but short term, we're screwed. We're screwed on every front because all of the things, everything you see around you, I promise you, whatever room you're in, it's all either made in China or has a component from China. And if that goes away,
Right.
it's not an easy fix. So
And
recession is putting it lightly. The
yeah, no,
boom that comes out of that, deglobalization will result in massive booms in certain ways. Like Europe will need its own China. So Eastern Europe, for example, will probably have an absolute renaissance of manufacturing. Companies, but places like Germany might massively suffer because Germany has huge demographic issues, it has huge skill issues, and it's also a highly manufacturing nation. But if you've got countries like Poland, Romania, Bulgaria able to go, oh, actually, we're able to make all of the same shit Germany does, but for half the cost, and we can make all of the cheaper stuff, and we can do it more efficiently, then there is room for a renaissance of industrial manufacturing in advanced nations. But it's very inflationary, and it will result in things costing more. However, we're also heading into a huge period, 10, 20 years, of all the baby boomers retiring and dying. Sad, morbid thought. Yes, it's grandma and granddad. However,
the way it is.
it's the way it is. And what it is, we are now in a significant period of labor shortage. And labor shortages over long periods mean wages go up. There's no such thing as a labor shortage. There is only, I'm not willing to pay enough to get an employee shortage. That is it. Labor shortages are complete myths. There is the labor pool, there is the available labor, and there's the available demand for that labor. If the demand outstrips the supply, either find a way to do with fewer employees, or your company will go bust, or pay them more wages, and then you can get the employees. There's no such thing as shortages. There is only ever finite pools of demand and supply for stuff. And if you don't fit your business, your economy, your society within that framework, you're going to have problems. Labor shortages are not going to go away unless countries adopt very, very pro-immigration stance. And that then comes with its own political minefield to wade through. And whether you're pro-immigration, anti-immigration, the facts are absolutely rock solid that an immigrant on average provides more economic benefit than somebody who was born in that country. It's almost exclusively true. Not every immigrant, but on average. And therefore, the higher your level of immigration, the better your country's GDP per capita is going to become. So having nationalists who are in a minority complain and shout and be angry about that, as long as that doesn't lead to kind of overthrowing of governments, that's going to be accepted because it's a necessity. It's not what people want. It's not what people desire. Certain people, other people are happy with it. It's irrelevant. It's a necessity of the political landscape, the demographic landscape, and the economic landscape. And countries have got to either survive or fall victim to the trends of people that are going to reside in their country. Ukraine is a perfect example of a country which is now decimated beyond repair. That country can now not recover. It had a horrific demographic profile before the war, and now it's had several rounds of wars which have led to hundreds of thousands of casualties and several million more people, predominantly the younger, the richer, the more mobile, the more educated, not wanting to say it, but the best of the country, the brightest people within the country are the ones that were more able to flee. And what you're left with is the ones who can't get out, the ones who are stuck in this country. And what you look at how much building is going to have to be done, and of course there's going to be a lot of aid for Ukraine, but how does a country actually pick itself up when it doesn't have the people to even function and provide basic services? It can't. And country after country after country for the rest of this century are going to face this extreme demographic cliff. China, South Korea, Russia, Ukraine, and over time, Sweden, UK, France, all of them, the US will go.
Well, so one thing that I really love about this is that you started this 25-minute long rant with, you want the short answer, basically.
It was. That was a
And
very short answer.
that was a quick rundown of basically everything, yeah.
Yeah.
But that it kind of shows how huge the macroeconomic side and the macro thinking that you'll have to. I don't say you have to learn this if you want to get into this stuff that we're doing, you know. But certainly it helps to understand how the world works, because then you can try to predict the big moves.
So,
right?
so there's a YouTuber, again, I'll recommend everybody follows. What If Altist? He's absolutely brilliant, and he has a saying that he does repeat, and he says he's betting against God in that there are a million ways to be wrong and only a handful to be right. And that's exactly the sort of thing there. It's like nobody knows what's going to happen, but there are so many trigger points simultaneously popping off around the world that it only takes one, because we now have this interconnected global world that it's a spider web, and if you pull on one thread, the entire spider web jiggles. So you cannot separate any of these economies from each other. So when one goes, and it's if the Chinese real estate market goes, the only way out of that is a dump load of stimulus. That dump load of stimulus will crash the currency. In crashing the currency, it will make exports cheaper. Well, then that depends on what the US's ability as consumers are, because the US has been shown it's got an incredibly resilient so far to the global cool down, and everything kind of looks rosy. And yet, when you look at the personal savings rate, when you look at the amount of credit card loans, automobile loans, housing loans, the economy is surviving, or it's flatlining, it's leveling off, but it's doing so on debt. It's not doing so on prosperity. And it may be that wage rises come along, or through immigration, the labor supply manages to grow such that the economy can actually start sustainable growth, and we get this fabled soft landing. And it's not out the woods that we do get this soft landing, but it's very mixed signals at the moment. And right now, nobody knows when things are going to break, but we say something will break at some point, and it's going to be nasty. And it might be a decade or 2 decades of nastiness. And within that, there's going to be incredible technological advances and changes to our lives in ways that we can't even imagine. But at the same time, there's going to be just complete collapse of the global order in certain countries and in certain areas. And predicting that is impossible, but being aware of it's more about being able to follow. If this happens, then this happens. So, for example, Russian sanctions, we see what that would do to oil and gas. Therefore, we see what that does to the European energy market. Therefore, we see what that does to transportation. Therefore, we see what that does to prices. Therefore, we see what that does to the amount of packages being delivered. It's like there's everything has a consequence, and one thing you change in an economy changes 2, 3, 4, 10, 1,000 more things.
It's as simple as the very old saying, which is kind of cliche, but it's cause and effect. And then it's a chain reaction with everything. It's always been that way.
You don't get out for now.
Yeah. So the real question, really, for most people would be, okay, so what do we do? And so something that should be happening with, China is probably going to start printing a lot of money. Then everybody's going to copy paste that idea to kind of get out of this whole rut. There's going to be mass inflation. And what happens when there's a lot of money printing? Well, people invest into assets that are scarce, like gold, like Bitcoin, etc., etc. Because What
So-
else would you do if you know your currency is going to lose a lot of buying power? Of course, you're going to put it in something that feels safe, if that's Bitcoin for you, or if that's gold, or whatever. Nobody can
Exactly.
tell you which one is the right one. Personally,
And,
for me, it's
you know,
Bitcoin, but it's like it's still going to dump.
we were taking a look at stocks before, just slightly before, and it's like, the S&P's sort of churning over and heading down. The Nasdaq was flat, but then you look at the likes of Apple, and Apple's still doing perfectly happy. And you think, well, okay, why is that? Because say Apple is one of those companies, as I mentioned, so they have thousands of subsidiary companies that make components for the iPhone, and something like 90% of them are in China. China goes, good luck getting your iPhone. Good luck getting any iPhone, getting any Apple product for years.
Yeah.
And that's one company. Now extend that to Samsung, to Google, to every single phone manufacturer. It's all the same thing. And then let's expand that to computers, to a lot of the high-end stuff isn't made in China, but a lot of the low-end stuff, a lot of the cheap stuff, the cheap tech that we use day in, day out is made in China using low-tech chips. What if we can't get hold of them?
What you're saying is, if you don't have a PS5 now, go buy it.
I mean, kind of. Well, that was say ripping off a lot of Peter Zion stuff. I do follow him a lot because he is very on the pulse of what happens with. But he said, when if you're looking to buy a new iPhone this year, maybe consider buying 2.
Yeah,
and it is true. Look at COVID and look at the delay for new cars. And cars are a very specific example there, where you've got several, over a couple of $1,000s worth of chips in each car, and if one chip is unavailable, that car can't go. So you need a huge global supply of chips. So companies like Tesla, if they're not making their own chips, or are they planning to make their own chips? I would assume eventually they will, because if they can't get hold of anything, well, good luck with that business model of being the number one EV car manufacturer on the planet, because you ain't gonna be. If you're trying to get hold of lithium or platinum or a whole host of other very necessary precious metals that are all mined in China, good luck getting them out the country. There's the Congo is sitting on several $1 trillion worth of resource wealth. Why is nobody going in there and getting it? Because it's barely got a functioning government. You think that all these Chinese mines are going to carry on working if China doesn't? You've got a country that's one of the most heavily debt-laden countries on earth. A great example would be that they have more collective debt as a share of GDP at a local level than the US government has at a federal level. That's not including China's federal debt. That's not including their personal debt, which is amongst the highest in the world. China's debt situation requires so much money printing that it will just destroy everything because they say, what happens when a country, they said 85% of their personal savings are in the real estate market, and the real estate market is functionally worth 0. Yeah, that is if you've got an oversupply, if you've got 2 houses for every person, what is your housing market worth?
Nothing.
A fraction. If anything, it's worth 10%, because there's some houses are more desirable than others.
Abundance makes things cheap. That's how easy it is, and it's So now that David actually mentioned
never
this,
going away.
Yeah, so David actually just mentioned this. He's asking about the ETFs in Hong Kong by Monday, and it's like, it's not going to mitigate the disaster. What it's going to happen is that it might help some Chinese people to have some type of savings if they think they're going to print a lot of money.
I expect that this ETF will be available to very select customers only from China.
Well, it's going to start trading. It's going to start trading, I think, 14 days after the fact that they kind of announce it on Monday, or make it official on Monday. I can't remember who said that off the top of my head, but essentially they're It's going to start trading, and it apparently, if I remember correctly, it's going to be open for everybody.
Yeah. Well, yeah, but but for Chinese citizens,
maybe, I don't know.
I
have
mean,
no
I
clue.
would say I would be very surprised if it's available for everyday Chinese citizens to just buy Bitcoin, or if it is, their ability to withdraw, because China won't have any issue with their citizens having exposure to Bitcoin as long. Go on.
You're going to, if I remember this correctly, and don't quote me on it, but I think this is true. You're going to be able to put in and withdraw Bitcoin from it, rather than.
I would be
currency.
just astounded if the Chinese government allows citizens to do that, to withdraw Bitcoin to any wallet of their choice.
It was or an ETF that was going to do that. I don't remember if it was a Chinese one.
Well, Hong Kong being a region of China, but again, China is not one country. China is the Hunger Games. It's Beijing. It's these metropolis cities, and then outside it are the regions, and the regions do what they do. They basically live as subsistence farmers or cheap labor that doesn't really have much in the way of ability to go out and spend, consume, or have any say about anything.
Sorry, I'm just trying to find this now, because I know I've heard it. I can't remember if it was one of those ETFs or not. But
so it may be that the majority of Chinese people will not have the infrastructure or the ability to access this ETF. I would expect. Maybe. In the same way that even advanced nation, how many normies invest in stocks before Robinhood?
Mm-hmm.
Yeah, the retail kids, young people investing in stocks is really, really novel. Since
it's rare.
Yeah, let's go back. Go back to the mid 2000s. Nobody. Now we're fucking trading meme coins on Solana, but you got 15-year-old kids making millions. How many stock traders did you get in the mid 2000s? It just wasn't a thing.
4.
So yeah, 4. So anyway, yeah, it's not, that I don't think it's going to mitigate some of the disaster, because normies will not have access to it. Because if more normies do have access to it, well, how do they get their money out? Their money's in real estate. They're paying incredibly high payments. They can't sell the real estate because it's not worth anything. So these people, sad to say it, they're done. They're screwed. And what is going to happen when several hundred very angry, very pissed off people whose lives have been, these people's lives have been made very, very good by the CCP. Their grandparents were all subsistence farmers. Some of them were suffered from famines, disease, absolutely nothing. And now they live in bustling cities with all of the shiny lights of capitalism that they learned were evil when they were younger. But they've taken on an awful lot of totalitarianism and a lot of shit and a lot of things that we as developed nation or advanced nation, I don't like to use the word developed nation, but advanced nation, we take for granted, and we would never accept that level of totalitarianism because we've not had the same growth they've had. Now, if the average Chinese citizen loses 85% of their savings because the housing market goes to zero, and then when they turn around and go, excuse me, where's my money? When they go to the bank and there's a bank run and nobody can get hold of their money, and then the Chinese start printing like crazy and we get a bout of hyperinflation, and let's just say in between that, China decide that they are going to invade Taiwan, and they give military training to several million very pissed off people. Let's say they don't do that. How long does the military support this action? Because bear in mind, the military are some of the most indoctrinated in China. They will, they are hardline party supporters. They have to be. But when they see their people starving, and the Chinese Communist Party try and hit them with repression when they start to riot and demonstrate, and the government turn around and say, start shooting your own citizens. That's the breed for revolution. It doesn't, nobody knows when or how, but A housing market crash could absolutely kick it off if it means people stop getting fuel, stop getting bread, stop getting the ability to feed, clothe, and protect their family. Then yes, societies break down very quickly, especially when they're as pissed off as China. And China are pissed off because they're no longer seeing the growth that they sold their soul
They
to
were
the
promised,
devil.
basically.
Yeah, they sold their soul to the devil, and unfortunately, the devil payment comes due, and this is the payment. That you can't just run an economy on fast forward, give subsidies for everything. How many people are buying stuff on the TikTok shop for £1.50 that should be £10? You get that because the Chinese Communist Party is subsidizing the payment to the company who makes it. That is why it's not real money. They're just keeping the ball going, they're keeping the game going with debt, and eventually it's going to break down.
Right. So it's a bit of a dire day today. Yes, we've had some stuff happen in the markets. We're going to round this off here. I just wanted to show this because we were in here and watching this for a while. Bitcoin did the thing. Now it's up. It's bouncing on the fib level, failed the golden pocket. This is the 1 minute. And yeah, it's like we said, we think it's going to kind of just chug upwards here. It's going to try to break up from this. And then once it's happened, then it starts getting a bit more like, okay, it's turning around. But for now, it's like you just have to wait and see if you get another opportunity to add to your positions. See if you want to put some more cash into Bitcoin after hearing this extremely bearish China talk that we just had.
That's it. As in, the bearish is relative. Say Bitcoin is the agnostic opt out. It's the way it's property that can't be taken away. And say Chinese people would love to have access to Bitcoin. That's why I think it's so unlikely they will be able to have normies will be able to have a Bitcoin ETF that they can access, that they can withdraw from and get Bitcoin in their possession. I think that is incredibly unlikely because many Chinese citizens will be putting everything they can into it, withdrawing the Bitcoin to their own possession and getting the first flight out of the country, because that is the first time they've been able to get capital out of the country. So I don't think that's going to happen.
What I think, I can make a small prediction though.
Go.
I think if things start going really, really bad in China, I think there's going to be a lot of Chinese people trying to look for ways to get into Bitcoin on the blockchain level.
Yeah.
Rather than, they'll take the difficult route. They'll have to learn, essentially. Or they'll think that they'll have to learn, and I think a lot of people will.
And let's be realistic at the chain level. If you are relatively poor, you don't have a lot of money, then Bitcoin fees become a problem.
Mm-hmm.
Suddenly, what's the next best thing? Well, it's Tether. So that doesn't necessarily
on a cheap chain,
Alternatively,
whichever doesn't matter. Really,
I don't know how many other people have seen, but there's a video of some African grandmummy with a phantom wallet with a dog with hat, and it's like, oh, it's your happy cat. Look, oh.
I love that. I love that. I saw that before. It made me cackle quite a bit.
I'm there just looking at it, being like, yeah, she's my exit liquidity.
Oh yeah. Rough.
Yeah. And that's the game. I'm sorry. I
don't have any cat with hat though, so she's
I don't have it. No, this is Appy Cat. But I bet now that video going viral has actually sent Appy Cat nuts, and people will have bought it just to make her some money. She had like $30 of it or something. But
perfect.
No, it's
worth $13 million now. She's like, all right, guess I'm moving to Switzerland or something.
Yeah. So well,
yeah, we're gonna round this off.
2 hours. Good.
2 hours. Good one. My record is 2.5 though, so you still have that to beat.
Okay, off we go. Come on, another topic.
No, I'm actually. It's 10 p.m. here, and I need to round this off myself. So, this was a fun one. We got a lot of great comments. I don't know who Linda is, but you're
that would be my mother.
Oh, hi, Mom.
Would be, I assume so. Anyway, that's the only other Linda with a Y that I've ever seen. So,
well, if it is your mother, then Hi, Rob's mother. I'm Phil. I'm the bad influence on Rob that you're probably going to complain about later.
Even though it's just somebody with the same name, but genuinely, I've only ever come across one Linda with a Y in my life, so I'm assuming it is. So
Yeah,
Hi,
and see,
Phil.
I got a little kiss on the cheek there too. Thank you, Linda.
There you go.
Yay! Now my day is made, and we can round this off for
And
sure.
now we can go.
I love moms. Moms are the best. But okay, cool. Let's see. I'm gonna push this out to this one because I'm gonna wave around with my hands, and I want people to see it. Thanks for coming, first of all. Secondly, I hope you learned something and didn't get too scared, or maybe you got scared enough, just enough to kind of get super bullish on Bitcoin or something.
Yeah. If you have any friends that have been asking about it and they've got 2 hours to waste, then yeah, send them this way.
Yes, and you know the deal. Like, subscribe, all that stuff. Actually, like when we start the video instead of after, because then more people can come in. I keep forgetting to say it in the beginning, and that's on me, but if you're not joined the Discord yet, do that. Come talk to us. We have these types of conversations with our members basically on a daily basis, and I think a lot of people in this chat here can attest to that. We just like to talk about stuff, right? So yeah, like, subscribe, notification bell, follow us on TikTok and all that stuff, and we'll see you in Discord. And if not, we'll see you on Monday. It's going to be the next video. I think it's going to be TA Monday.
Yeah.
Good luck this week and keep your eye on the market. If there is a big dip, maybe consider getting in with a little bit more. Yeah, that's it.
Yep.
Bye, everybody.
Bye.